All right, another practice problem coming your way. In this practice problem, we have a complicated scenario. You purchase an asset, you make an addition to that asset in the following year. Then there is some depreciation, then you sell part of the asset. So let us see how we are going to record such transactions in the journal. So I'm going to create a timeline as we move along. So I'm going to write year, I'm going to write the month here, and then the other transactions. So let's write transaction. All right. So the year is 2017. The month is April 1. The furniture is being purchased. The transaction is that you purchase the furniture. All right. So you are purchasing furniture for 50,000. So let me write the amount here, 50,000. The next line says depreciation to be charged at 10% per annum. So every year you charge depreciation at 10%. Which means that when this year first year ends, which is going to be 2018 March 31st, this is when the first year is going to end. So let me write this as year 1. First year ends here, and at this point in time you are going to charge depreciation. Depreciation will be charged at the rate 10%. Which means 5,000 will be the depreciation, and therefore the new book value is going to be 45,000. So in the next year, when the next year begins, year 2 begins, which is April 1st, the book value is going to be 45,000 of the furniture that you have. On April 1st, 2018, there is another transaction which is happening here. An additional furniture worth 20,000 is being purchased. So you say new furniture, new purchase of furniture worth 20,000. And I'm going to, let's say, write it here, 20,000. This is the old furniture. This is the new furniture which has been purchased. Okay, new furniture purchased, done. On September 30th 2019, that is next year, so let me first close this financial year, March 31st 2019. This is when the second year is going to be closed. At this point in time, we are going to charge depreciation at the rate 10%. Now 10% of what? 10% of this new book value, which is going to be 4,500. Similarly, on new furniture, you will charge 10% depreciation as well. This is going to give you new book values of the two furniture items, 40,500 and 18,000. This book value is in the year 2019, but the new financial year, April 1. So the third year has now begun. On September 30th, 2019, so 2019, September 30th, old furniture is sold for 30,000. So the old furniture is going to be sold at this time. And notice that there is 6-month period which has lapsed. So April, May, June, July, August and September, 6 months, half of the year this furniture has been used. So what we need to do is, first of all, let me write this as book value at the beginning of the year. On September 30th, when you sell the asset, you have to figure out what is the book value of the asset. Therefore, you're going to charge depreciation again because you've used it for half a year. So you'll say depreciation 10% divided by 2 because it's only half the year. So this comes out to be 2025. Yeah. So 2025, which gives us the new book value. Book value as of 30th September is going to be 4 and 38. All right. So 38,475. This is the new book value that you have for this furniture on 30th September. What is the price at which you sold the furniture? The selling price, the selling price is, where is it? 30,000. You sell the furniture for 30,000. But guess what? The furniture was valued 38,475. What does it mean? It means you made a loss. So there is a loss on sale. There is a loss on sale worth 8,475. And as of 30th September, this old furniture ceases to exist. The record should get cancelled because you have sold it and you have sold it on loss. Let us move forward. You have to write journal entries till financial year 2019-20. So 2019-20 is going on and I'm going to go to 2020 March 31st. This is when the third year is going to get closed. At this time again we charge depreciation. No depreciation here because this furniture has gone out of the business. However, you will charge depreciation on the new furniture which was valued 18,000. 18,000 was the value of the furniture at the beginning of the year. You charge a full 10% on it, so 1800 here. Therefore, the book value of the new furniture which is remaining in the business comes out to be 16,200. For furniture 1, it is 0, it is nil because it has ceased to exist. And on 30th September, during this time, there will be no depreciation, nothing, no transaction on the new furniture, obviously, because that was not affected. So see, this is a little bit complex transaction. So we had to draw this table. I had to explain it to you step by step. Now we're going to write the journal entries. In the journal entries, we're going to follow, we're going to write it for 3 years, year by year. So let us start 2017. 2017 April 1st. You purchase furniture. So when you purchase furniture, you write the name of the asset, furniture account debit, and you're going to pay for it to bank account. The amount is 50,000. Debit and credit. The amount is in rupees. There you go. And I'm going to skip writing the narration because I hope you followed that till now. So let's focus on the transactions. At the end of the year, you charge depreciation. So 2018, so I'm going to just close this. 2018 and March 31st. Depreciation will be charged. The journal entry is depreciation account debit to furniture. To furniture account, the amount is 5,000 and 5,000. Done. The next transaction is on April 1st. Now this book value, this is not a transaction. This is only a calculation that we are doing. There is no transaction happening here. So the transaction is the new purchase, April 1st in 2018. So April 1st, you purchase more furniture. So we'll say furniture account debit to bank account. The amount was 20,000. Close it. 20,000 purchased. Here, new purchase. And then at the end of this financial year, you charge depreciation. So 2019 March 31st, you write depreciation account debit to furniture. Now in this case, you have two depreciations. You have 4,500 and you have 2,000. So total depreciation is 6,500, which is being charged for this year on the total furniture. So I'll write 6,500. Now you might be thinking that can we write depreciation on old furniture account and depreciation on new furniture? You could do that, but again, there'll be so many different furnitures purchased during a year or across years that you won't be able to maintain the details separately. So create one single account for all types of furnitures. You can create depreciation account separately for furniture, for building, for different types of assets. But within one asset, it is advised that you keep it combined. But again, depending upon the size of the asset, you could vary it. All right, so we are done till here. On April 1st, new book value. Again, for book value, there is no transaction here. On September 30th, 2019. So September 30th, 2019, there is a transaction of sale of furniture. When you sell the furniture, you get money. So bank account debit, what is the amount? You got 30,000. So debit amount 30,000 and furniture is going out. So I'm going to write to furniture, but let me just create a little bit more space because I know there's going to be depreciation. So I'm going to write to furniture account and there is depreciation on this time period, depreciation account debit, and there is a loss on sale of furniture account debit. So this is a complex journal entry. The loss is equal to wait a second. So the loss is the value of the furniture was 38,475. The book value at the beginning was 40,500 first of all. So 40,500 is the book value, and then you charge a depreciation which is 2025. So 2025 is the depreciation up till 30th September, and the remaining amount is loss of 8,475. So when you sum this up, this should be equal to 40,500. So what we really did here is we removed the balance, the book value. So if you see here, book value was 40,500. We have to cancel this. But in order to cancel this, we gave it a credit. Now all credits have to have an equal debit. Now how will that debit come in? You received 30,000 cash, done. Depreciation for the 6 months on this specific furniture which is sold, 2,000. Depreciation is an expense. You debit all expenses. And loss on sale, we calculated it as well. So book value minus depreciation minus the selling price, you have your loss. Or nominal account, all debit all expenses and losses, and there you go. You've written this transaction in the books of accounts. Now the next entry is in at the end of the next year, 2020, March 31st. So I'm going to close this. 2020 March 31st. You're charging depreciation on the new furniture. The journal entry is same as it is for any depreciation transaction. Depreciation account debit to furniture. Furniture's value is going down. The value of the amount of depreciation is 1,800, and I'm going to write it here, 1,800. That's it. So we were supposed to prepare the transactions for up to financial year 2019 and 20. We have done that. This new furniture still remains in the business, and its book value is 16,200. If you were given more transactions, let's say another furniture has been purchased, or more depreciation, or rate of depreciation changes, or you sell off another asset at a profit, I hope if that happens, you should be able to write those journal entries as well. So we finished this specific case till the time point it was given to us. All right, I hope you learnt quite a few things in this complex case as well. See you in the next video.